The decision to take additional income from your business or defer it into the future is the result of a couple of decisions. And the first decision that we must do is to actually create a 3-year tax projection. The reason why we want to do a 3-year tax projection is because when you're running the business, you kind of have a greater insight here into the short and intermediate future on how the business is going to perform. Look, we all know where we think it's headed in the future, but here over the short to intermediate future, the next 3 years, we can really get a little bit more specific on what revenue looks like. And the reason why we want to get more specific on what revenue looks like is because what the business makes after the expenses, it ultimately filters down into your personal income. On your personal income, this is our second item here, which is to say that there are certain cliffs within the tax income code that we want to be mindful of. So let's say that you're kind of mid-career, you're in your 40s or 50s. You can have taxable income, ballpark, between $100,000 all the way out to about $400,000 in your marginal tax bracket. So on the next dollar that you earn, your marginal tax rate is 22 to 24%. It's really similar, right? There's not a major difference between that 22 and the 24 whatsoever. In that scenario, we'd want to accelerate the income, bring it to us. But if we go from 24, let's say your taxable income jumps up to here in 2026, it jumps up to 425. In that scenario, that marginal dollar, so that last $1,000 that you made, is getting taxed at 32%. And 32% from 24 is not an 8% jump. Actually, 8% of 24, it's about a 33% increase in your tax rate. So when we plan over the 3-year horizon, what we're able to do is to start to see, okay, look, I'm in the 24 here, I'm jumping up to the 32, and then I'm back down to the 24. So in that 32 year where you jump up, then you start to look at taking advantage of some additional deductions. So for 179 on heavy equipment, you need to be mindful of the fact that we can only deduct really up to about that $2.5 million, $4 million. We start to get kind of phased out as to how much we can deduct on our taxes. So be mindful of these limitations along the way. In addition to that, do you want to be taking advantage of depreciation on other assets that are being purchased in that year where you're in the higher tax bracket? So the decision to defer or accelerate income from your business, it's not a 1-year decision. It's a decision that you want to make over the course of the immediate future, which is really the next 3 years. So that all starts with having a 3-year tax projection. And then from there, we're able to back in and start to optimize for each calendar year, for each tax year, the efficiency for your taxes so that you're paying less in lifetime taxes, not just less in taxes this year, and then paying more next year. Thank you.